passive investing or active investing, which is better? For passive investors, they usually try and limit the amount of transactions in their whole portfolio. With a buy and hold mentality, they have to resist the urge of trying to time the market and trying to take advantage of any market news. Whereas for active investing, the goal for active investors is to try and beat the performance of the average returns of the market. Active investing requires the full confidence of the manager, the portfolio manager, to make the right calls when they are trying to time the market. Now, what are the pros for passive investing? First of all, they have a lot lower fees. Since there are little to no transaction costs and management, the cost of managing a portfolio for passive investors is usually very low. Secondly is very little time required. Now, if you buy an index fund or exchange traded fund, it requires very little time to go and manage your investments, because the main job of an index fund and exchange traded fund is to track the performance of the index. Now, what is an index? An index is basically a basket of securities. For example, the Straits Times Index, the STI Index, which means the top 30 Singapore stocks are put into this basket, which is called the index. Now, nobody can invest in the index. That is why index funds and exchange traded funds are set up so that they can track the portfolio or the asset classes in the index. Now, the cons of passive investing is, firstly, you have limited options. Now, if you buy an exchange traded fund or index funds, investors are locked into those investments no matter what happens in the market. Now, passive funds like exchange traded funds and index funds will pretty much never beat the market, because their main objective is to track the performance of the market. Because active managers are not required to follow a specific index, they can look for gems in the rubble. They can find stocks that are very high growth that many people cannot find. They can also get into desirable sectors and get out of undesirable sectors in the market. Active managers can also use a wide variety of techniques to profit from any direction of the market, whereas passive managers are stuck in the same stocks or index that they are tracking. What are the cons of active investing? The main issue for active investing is definitely the cost, because you are paying for the transaction cost that's happening within your active management portfolio. And on top of that, you also have to pay the team of analysts that is analyzing the different sectors, the different stocks, different asset classes within your portfolio. So which is better? Now, it depends on your personal preference. Now, passive investing may be suitable for you if you are investing for the long term and you want to save costs on your fees. Now, active investing may be more suitable for you if you prefer to do your own analysis of your own investments, if you prefer to have more control of your own investments, and you don't mind paying a little bit higher fees for the transaction costs. Now, what if you want the least cost, yet you want professionals to manage for you so that you have a chance of beating the market, as well as you don't have to spend so much time to go and analyze and research on the stocks that you are investing in? Now, if you want to know the best of both worlds, you can just drop me a DM. I'll put the link below. Now, if you want to join a community of couples and individuals who want to build strong finances and relationships at the same time, you can join the community. I'll put a link below. It is a closed Facebook group where people can share their experiences with each other. Now, if you like this video and you want to see more videos like this, remember to click the like button, comment, subscribe, and hit the notification bell, and I will see you soon in the next video. Bye bye.